everyone. Today is Friday, June 9th. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 685. And we're going to change things up a little bit this week. We're going to try a different format. Instead of kind of doing this part one, part two, we're going to migrate over and see if we can use TC2000 exclusively. I started migrating a lot of the data sets that we usually look at, recreating them in TC2000. I think I got a pretty decent job. I do have to finish a couple of things, but we're going to take a look at it today and do a slightly different format. So before we jump into TC2000, just the top 5 things from this week. Breadth expansion, continuation here. So this is I think it was number 1 point from last week's video. Last week's update was the Russell 2000 coming alive, participating, starting to get that, other stocks and just rotation in the market. We saw that continue this week. It was, in fact, the heaviest up week for the Russell 2000 in, I think, over a year on the upside. So that was nice to see. Sentiment surveys getting a lot more bullish. In fact, we're getting new highs in just the general sort of feeling and the feel good about what investors are looking at in terms of this market. So we're starting to get some sentiment crossing over. VIX levels not seen since 2020, and 70% odds Fed keeps rates steady next week. We're going to look at all of these things in just a minute. Stay tuned. All right, we're back. We've got TC2000 open here with a brand new layout. So we are going to change things up a little bit this week. I want to know your thoughts as we move along here. Leave a comment below if you like the new format, new layout, new sort of view on markets. A lot of it should be familiar from our old part 1, but we're going to kind of change it up and add some new things as well. And so we're going to continue to look at markets with all the different dimensions that we usually do. So kind of that intermarket analysis where we're looking at, not just price action, but we are looking at, volatility and individual sectors and how more the macro is moving in terms of commodities, the dollar, interest rates, et cetera, et cetera. So let's get into it here. So if you follow my mouse, we got our same old grid here that we used to look at. So basically, if I look at performance this week, we can see that the Russell 2000 was at the top of the list here, 1.63% to the upside. S&P was also up this week, but the NASDAQ and international stocks outside the United States were actually down. So we are continuing to see this rotation. You could say rotation more into the value stocks, but really just outside of those growth names, the mega cap tech leaders that really have been driving this rally for the last 2 months is kind of their second week off, or at least first full week off of kind of taking a breather here. And also when we look back over the past month, you can see that the Russell 2000 is starting to play catch up. Remember, the Russell 2000 was threatening this breakdown. We saw, a lot of folks kind of interested in maybe playing for that next leg down in the Russell 2000. And last week, we just got the total opposite reaction. We got the springboard breakout higher last week, which we talked about, and then we essentially just got more follow through this week. If we take a look at volatility here, you can see that we did get volatility in the NASDAQ and in the S&P 500, both of those indices here coming down this week. So that is still nice to see. 13.86 here for VIX going out into the weekend. That is impressive. It has been a long time, 3 years plus, since we've seen the VIX this low here. So that is quite the look right now. And if we look here at our individual charts, you can see basically, things were good to choppy this week across the board. Russell 2000 definitely the best here. A little bit more choppy in the NASDAQ 100 this week, closing pretty much where it started. So let's go into the sector overview here and take a look at what drove this market this week. So on the right-hand side, you can see consumer discretionary was at the top of the list, followed by utilities and energy. Definitely a different flavor there. On the downside, consumer staples, technology, and healthcare. Those were the 3 underperformers this week. You can see consumer staples and tech were red, healthcare just slightly green on the week here. But we did have 9 out of the 11 sectors here were in the green this week. So again, speaks a little bit more to the breadth. It's not just communication services and technology leading. We are getting more expansion here in some of the other sectors of the market for the first time in many months, or really the second week in a row, let's call it. If we take a look at the sectors here, So this is kind of a sector grid with our smart trend filter applied. And essentially you're just really looking at what the state of all of our individual sectors are. And you can see, you know, basically when you're getting green dots across the board here, the more green dots in each of these little squares, the better. And you're starting to finally see, for instance, now right here where my mouse is, energy, right, is starting to flip up, getting some buy signals here earlier mid this week. Financials, right, this was last week, really started to turn up on a bullish note. Industrials turning up on a bullish note here. Materials turning up in a bullish note. All of these have been kind of trend changes to the upside here. This is a daily chart, so it's not a very long look back period, but still nice to see here that we are getting some of these uptrends kicking into gear in some of these other sectors of the market. You can see biotech still a little bit more turbulent and uncertain right now. Same thing with healthcare and utilities trying to turn a corner. Staples still negative here from a trend perspective as well. So we're going to keep an eye on that, but for now, sectors trying to improve here from a broad basis. Now, let's take a look at market breadth here. We've got a couple of different views. So if you follow my mouse here, bottom left, here is the classic 52-week highs, 52-week lows. And again, take a look at the last 5 days here. You can see that we've just seen a lot more breadth expansion to the upside. This is a theme. I'm going to continue to hammer it home as all the data is basically pointing to it. But you're starting to finally see an uptick in the number of stocks hitting 52-week highs. You're starting to see the red here start to drop, and that is the 52-week lows being made. So you're getting a stronger ratio of stocks hitting 52-week highs. You can see above here, you've got percentage of stocks at a 200 above their 200 SMA in the NYSE, continuing to be on the rise here. It's about 53%. Same thing with the 50 SMA, 55%, and trying to lift up here. On the right-hand side, you can basically see our old market gauges that we've built out. And from, you know, an S&P perspective, had about 66% of stocks up on the week. NASDAQ was a little bit weaker, and Russell 2000, once again, pretty the strongest here. 69% of stocks were up this week. Volumes weren't really that strong. The Russell 2000 definitely had the best performance in terms of volume. So 44% of Russell 2000 stocks were up this week on above average volume. So that is definitely, you know, kind of the strongest of this mix. NASDAQ was kind of in the middle, S&P a little bit lacking from a volume perspective. Now, I think right now would be actually a good time to take a look at some of the other data points I want to bring in here. And first is just, you know, frankly, well, let's start actually with the bulls and bears here and the sentiment surveys. So if I'm pulling up AAII sentiment survey here, which is one of the most popular, you can see that this week we've got 44.5% surveying bullish on this market. And if you look at the historical view here, this is a one-year high for bullish sentiment. And this is just AAII survey. You can go right down the list. So IBD has one similar. So this is in there. IBD digital subscription. So shout out to IBD. They are sponsoring the show, and you can find a link in the description here. This is one of the sentiment sort of indicators that they publish on a routine basis. And you can see even theirs is showing 51% bulls right now. And you can see that is basically the highest that we've seen since September or fourth quarter of 2021. And you can see the number of bears just continuing to decline here. So we are seeing from a, you know, psychology perspective and just, you know, how people feel about this market, they're starting to get more comfortable, and prices tend to do that, right? Market rallies tend to do that. It is a reflexive nature of sorts, and it's a kind of, you know, chicken and egg thing, which comes first. But generally speaking, people feel better when prices are higher, and that is certainly leading into this. So I think that's very interesting from both perspectives here. And again, check out the link for IBD in the description of this show. Now, Fed. I wanted to mention Fed before we move on here. Might as well tackle it now. We've got the Fed meeting next week, so June 14th, and we've got basically 71% priced in here of Fed not doing anything, essentially just keeping the Fed funds rate as it is. There's just shy of a 30% chance of a 25 basis point rate hike. We're going to want to keep an eye on this. Going to certainly be a market moving day on the 14th, just as, basically we get the true decision here. If the Fed does in fact rate hike, then, we're going to have a little bit of a repricing, I would imagine, across markets, as this is not currently the most likely scenario. So let's keep an eye on this right now. You can see it's been pretty steady though. The last few days, even last week, it's been hovering around 70% chance that the Fed just doesn't move here. So that's interesting, and we should pay attention to that as a catalyst. Moving along here, if we take a look at commodities, top right here, you can see best performing on the week is natural gas, up 4%, followed by silver, copper, and ag, all up about 1 to 2%. Gold was up about 0.5%. Dollar index was down, so taking a little bit of a breather again for the second week in a row. And crude oil was down just a bit, had a pretty volatile Thursday actually, but finished the week down 1%. It's down about 2% over the past month. And take a look at its performance over the past year. It's down 31.59%. We're looking at the USO ETF, that is, so not the futures continuous contract. In terms of trends here, you can see that silver starting to print a little bit of a bullish transition here, so that's encouraging for your silver bulls out there. Gold still in this pullback mode right now, and again, this is all on a daily time frame that you're looking at, our smart trend filter indicator. So let's move on here. Treasury yields this week, you can see we were up this week across the board here. So I'm looking at the CBOE Treasury yield index here, so I don't have the actual percentage yield, but you can see that all of these were up this week. Move index was down, and you can see when we look at price action just from our visual chart here, you can see that most of the Treasury yields are still kind of stuck in this range and just been treading water, mostly sideways. So we want to keep an eye on this. If we do start to get a breakout here, if we do start to get a steepening of 10-year Treasury yields, market will certainly want to be paying attention to that in terms of its reflexive sort of move on equity markets. But for now, we're still kind of chugging sideways here. We haven't really broken out, just been kind of treading water for the most of this year as we hover between, a range essentially sideways across, pretty much all these maturities. Now, I think that is where we're going to end things before we jump into some of the price action analysis. So this is kind of now officially starting our part 2, as it were. But if we take a look here at the S&P 500, this is a weekly time frame, and this is our old grid here, and we are finally starting to clear above all of these prior levels that the market has failed upon. Now, we are right here at the top kind of granddaddy of the levels here. This is up around 4,300. This was the peak in August of 2022. And so you can see the market giving just maybe a little bit of hesitation here. S&P 500 is working on 4 weeks up in a row. And if we go down to a daily chart, you can see the action from this week. It was tight. Starting on Monday, we cooled off after a strong Thursday, Friday session, just that big ramp, which finally broke us out over 4,200. We had the gap and go session on Friday. We talked about this last week. Monday, we cooled off, went sideways. Tuesday, sideways. Wednesday, sideways. Thursday, sideways. And Friday, here we go. We gapped up. We tried to push up. We got as high as about 43.22, and then we reversed a little bit and closed a tad lower. So still up on the day, little bit of indecision here, little bit of maybe tiredness here as we go into the weekend. We've got a big week ahead with the Fed out. I think there's a lot of econ data coming out next week. So there are, there are a good amount of catalysts here. We've been running pretty hot, but let's, continue to ride this trend here. S&P, nice bullish, kind of technical positioning here as it consolidates, breaks out, consolidates, breaks out. If it starts to lose this or follows through to the downside next week and it rejects up here at 4,300, then perhaps, you tactical active, aggressive, and I mean aggressive just as short term, frankly, traders that want to hedge or short the market or reduce risk, I mean, you've got a little bit of an opportune spot here if we, get this confirmation lower. And again, as we zoomed out and we saw how significant this spot was, this is where the market topped and failed in August of 2022. It's a very logical spot to see some supply kind of kick in here as price has memory going back in, a couple of years ago. So now it's getting a little bit long in the tooth in terms of the last time we were up here, but still price has memory, and we have moved a decent amount this year. So keep an eye on this. If we follow through to the downside and we start convincingly losing this 4,300 and fall back into this old zone, then you've got a nice, measured place to be tactically short or tactically hedged. Otherwise, this trend is still very much in the bull camp, and the bigger level is around that 4,200 zone. We spent a lot of time trying to get over 4,200. So for you longer term kind of position traders or longer term swing traders, I still think 4,200 is the bigger zone to keep an eye on. But everybody's got different time frames on how they want to manage their risk and exposure. So we'll keep an eye on this as well. So that was really the big action and story from this week. Let's go to the IWM. This is clearly what's still in favor here. And this was the strongest move up in volume. Yeah, I guess, maybe we had one other one, but one of the strongest in the past couple of years. We had this one here back in March. But you can see, again, just convincingly getting more follow through over and outside of this range here. So we talked about this range 178, 179. This was the top end, kind of banging its head, moving sideways for the past three months. And then you can see there's just this big green bars coming through on volume as we got that nice push and range expansion up. MACD leading up. We are cooling off a little bit into the end of the week. So this is where, we just want to see bulls continue to keep the momentum alive here. Consolidation, a little sideways here totally makes sense, but we don't want to roll right back over and start losing 180 or just, give back all of these gains right away. That's what you're looking for going forward here, is just the conviction or essentially the dip buyers to kind of come in and defend this and hold market rally, hold the market breath in line here with this market. Longer term structurally, looking at the bigger range here, Russell 2000 is still very much sideways. So again, if you want to zoom out even further, here's your picture perfect sideways range that we've been in for basically almost 2 years. So this is the bigger level, bigger zones up around 196. We're smack in the middle of this range right now, but TBD on essentially which way this ultimately resolves. We're going to need more time, I think, before we get that answer. Last but not least, if we look at the NASDAQ 100, you can see NASDAQ this week very much sideways, choppy, kind of just catching its breath, consolidating a little bit. Good to see, quite frankly, because it's had a really strong move to the upside. So whether you're looking at the NDX or you're looking at all relevant levels here, I mean, we've just broken out of basically everything here. I think Q's where I have my normal drawings on here. You can see that we essentially left everything else in the dust here, and we've just been trending higher. We've been expanding above the upper Bollinger Band, and now we're finally starting to just move sideways here. So for NASDAQ, I'd like to see more of it, more sideways. As long as we're above, call it 335, 340 or so, the August highs, then life looks good here for the NASDAQ. But if we start losing these bigger levels around 335, I think that's more cause for concern. Right now, that's about 6% away, so it doesn't seem like an immediate risk, but we'll see if we can get some more filling in here and just sideways grinding as the Russell 2000 and some of those other spots of the market pick things up. So that is the high level there on the major markets. If we take a look at gold, like we kind of mentioned at the top, it's still kind of in this pullback mode. It's been moving more recently sideways here around this 180. This is the GLD anyway, ETF. Weekly chart, again, you can see had a good run to start off the year and throughout 2023, cooling off a little bit. bulls trying to put together a green week and maybe stabilize around this 180 zone. Silver getting a little bit more upside kind of support here. You can see it did on the weekly chart managed to close up about 2.67% above last week's highs, trying to get above kind of this early January supply here. So silver, gold trying to put their act together. Dollar remains pretty strong though, and so it's had some volatility over the past 2 weeks. We've got this big wick here from this session, had some weird pricing on the first, but generally speaking, the dollar had emerged out of this range to start the month of May, and it entered this nice uptrend, got to the kind of the top end of the range here from the past 4 or 5 months here, and you can see it's just trying to figure itself out. It's trying to just hang in here, but it's not giving up. It's not rolling over here. So going to keep an eye on this. Again, Fed decision next week will certainly impact this, and this obviously has a good weighting correlation to what gold's doing, silver's doing, a lot of the commodities are doing. Last but not least, oil. We'll look at that real quick. You can see here weekly chart, very sideways over the last 4 or 5 weeks. Structurally hasn't really changed a whole lot, still kind of consolidating lower in this channel here and just kind of moving sideways. It is certainly working off this big run that it had throughout 2021, 2022. So you could look at it that if you have a long-term time horizon here, monthly chart for instance, you can see quite the digestion and low volume consolidation after a big run up for 2 years. So again, we'll want to just keep an eye on these ranges. Right now, it seems like it's kind of stuck in the middle, not a whole lot happening for oil. So that, I think, covers pretty much all of the majors I wanted to mention. If we finish off here with some industry, kind of breakouts or interesting moves happening here, a lot more on the bullish side, as you might expect this week. I won't go through all these names specifically, but airports, for instance, you got new all-time highs here, or are they all-time highs? Yeah, they do appear to be all-time highs. Airport and air services. Apparel is getting a nice lift this week. High volume coming in there. Some of those beaten up names that were, just beaten up or sort of squeezing up. Asset management, so you still get some support out of here in banks and financials. Beverages, brewers, people got to drink, right? So you're getting some, moves there. Broadcast TV starting to break out a little bit, more department stores, even insurance showing up here on the list as financials getting more and more love. REITs starting to show up a little bit as well. More finance, staffing, resources, big volume coming in there. Manufacturing, trying to hold the lows here, big volume coming in. Tools and accessories, and then XLI, just generally speaking, trying to emerge from a consolidation here. So this is interesting. You could also look at like the Dow Jones, which has been consolidating. Remember, it was the first to just rip up here in October of 2022, and then it just went totally silent here, but it's been consolidating, moving sideways, and now it's getting back up to some interesting levels. So if the Dow can start breaking out above 342 or so, or the Diamond ETF, look out for that. And industrials XLI ETF just coming alive at the same kind of time, obviously basically the same stocks. And on the bearish side, personal products. So again, you're still getting some decent weakness here in XLP, for instance. Has been selling off and just back into the middle of this range. Luxury goods also saw heavier volume down week this week, and then industrial REITs here consolidating heavier volume as well onto the downside. So that's all I've got for this week's video. Let me know what you think about the new format. Still kind of working out some kinks and trying to get some good displays, but I think we could look at some different views here and, trying to put together some more helpful layouts to just kind of keep a pulse on what's moving. So let me know your thoughts in the comments below. Hopefully you had a good week trading out there. Let me know what you think about these sentiment surveys hitting new highs and VIX at new lows. I mean, is this something that we think is durable? Is it going to stick? Or is this, getting frothy long in the tooth? Would love to hear your comments below. And as always, I want to thank you for tuning in every Friday, long form market analysis just like this. Click the subscribe button if you're not already, and hope you have a good weekend, and we'll see you back here next week.